focusing on short-term tactics that can produce results fast and provide the groundwork for longer-term success is crucial if you want to generate money in real estate in 100 days. I'll outline a clear path for you to follow as I break down the measures you can take into action. Please hit subscribe button for more informative videos. Number 1. Start with research. Importance of local market research. A thorough awareness of the local market is essential for making wise real estate investments. The National Association of Realtors, NAR, asserts that demand, price patterns, and the general investment climate are significantly influenced by geography. You can explore chances with a better understanding of what will provide great returns by concentrating on your immediate area. Make use of resources like Realtor.com, Redfin, and Zillow. Recent sales information, typical property values, and property history can all be found on these sites. It can assist you purchase low and sell high if you understand price variations. Verify the demand for rentals. If you intend to use rental techniques, research the rates of vacancies in various neighborhoods. Strong rental income potential is typically seen in areas with low vacancy rates. Market types to consider. Emerging markets. Seek out cities with growing populations, better infrastructure, and more employment prospects. Underappreciated areas. Certain communities may be experiencing revitalization or gentrification, which makes them attractive for investment. Number 2. Wholesaling. Quick profits without property ownership. Without having to own real estate, wholesaling is a great way to generate rapid income. Serving as a go-between for motivated sellers and investors looking to flip or hold properties generates the profit. Steps to wholesaling. Find distressed properties. Look through local listings, tax lien sales, and foreclosure auctions to find properties that are being sold below market value. Direct mail marketing can be an extremely efficient way to reach property owners in financial hardship. Negotiate the deal. The aim is to secure the property at a price that allows for profit. A decent rule of thumb is to secure a property for 60 to 70% of its after-repair value, ARV. This ensures that both you and the end consumer gain money. Assign the contract. Once you've reached an agreement, sell the contract to a buyer for a finder's fee that could range from $1,000 to $10,000 or more, depending on the property's valuation and location. Additional tip: build a list of cash buyers or investors who are constantly looking for properties to buy. These relationships will make your wholesaling business far more profitable and efficient. Number 3. House hacking. Turning your property into income. House hacking is a low barrier to entry strategy where you can essentially use other people's rent payments to cover your own housing costs. This is particularly useful in today's real estate market, where housing affordability remains a concern. Key steps. Start with a multi-unit property. Duplexes, triplexes, and fourplexes are ideal for house hacking because you can live in one unit and rent out the others. Look for properties with existing tenants or ones that need minimal repairs, so you can start generating income quickly. Calculate potential income. Make sure the rental income you expect to receive covers the mortgage and operating expenses. In some cases, you could even make a profit from the rental income. House hacking for beginners. Consider buying a fixer-upper, which can be renovated and rented for increased profit. Use platforms like Zillow, Redfin, or Craigslist to find rental properties that could provide solid returns with room to negotiate better deals. Number 4. Fix and flip. Capitalizing on property renovations. Flipping houses can be a lucrative strategy, but it requires careful planning, expertise, and capital. When done correctly, it can lead to substantial profits in a short period. How to succeed in fix and flip. Find the right property. Focus on homes in need of cosmetic updates rather than structural fixes. This could include updating kitchens, bathrooms, and flooring. Properties priced below market value due to outdated features are prime targets. Set a realistic renovation budget. According to Home Advisor, the average cost to renovate a home in 2023 was between $18,000 and $76,000, depending on the size of the property and the type of improvements made. Ensure your renovations align with the value of the home in the local market. Hire experienced contractors. To speed up renovations, hire a team of reliable contractors. Focus on essential repairs first, like roofing, plumbing, and electrical systems, before tackling cosmetic upgrades. Number 5. Rental properties. Passive income stream. Rental properties generate stable cash flow, which is why they are a go-to option for real estate investors seeking consistent returns. The key here is to focus on high-demand rental markets and properties that can deliver positive cash flow. Steps for rental success. Know your rent-to-price ratio. A good rule of thumb is the 1% rule, which means the monthly rent should be 1% of the purchase price. For example, if a property costs $200,000, aim to charge $2,000/month in rent. Short-term versus long-term rentals. Short-term rentals, can generate higher returns, especially in tourist-friendly locations. Long-term rentals tend to offer more stability but with less immediate upside. Number 6. Lease options. Rent-to-own deals. Lease options allow you to rent a property with an option to buy later, providing benefits for both sellers and buyers. This can be an attractive option if you're working with tenants who may not yet have the credit score for homeownership, but want to purchase eventually. Key steps. Set terms with the seller. The agreement should specify the purchase price, the lease period, and the rent payments. A portion of the rent can go toward the down payment if the buyer eventually purchases the home. Secure the right property. Look for homes in good neighborhoods that are likely to appreciate over time. This strategy is especially effective when you expect rising home prices during the lease period. Generate profit. You can either sell the lease option to a tenant buyer for a fee or increase your overall profit by charging higher than market rents with the option to buy. Why this strategy works. Number 7. Real estate investment trusts. If you're seeking passive income but lack the capital or desire to manage physical properties, REITs are a fantastic option. REITs pool money from multiple investors to buy, manage, and operate income-producing real estate. Steps for getting involved. Purchase shares in publicly traded REITs. Some REITs are listed on stock exchanges, allowing you to invest in real estate without owning any property. You can buy shares through broking accounts, making them available to a wide range of investors. Look for REITs that pay a high yield. Determine which REITs have the highest returns. Some REITs provide dividends of 5 to 7%, but others give higher yields depending on the property type. To reduce risk, diversify your REIT assets across several sectors: commercial, residential, healthcare, etc., like you would with stocks. Benefits. REITs provide the potential for high dividend income, which can be an excellent strategy if you're looking for a consistent cash flow without the hassle of property management. In real estate, there are several ways to generate money quickly. Each technique, from wholesaling and house hacking to flipping homes and investing in REITs, has its own set of advantages and drawbacks. You can make money in real estate in 100 days if you enter with a clear understanding, use your resources properly, and keep an eye on the market. If you found this video helpful, and subscribe for more tips. Thanks for watching and best of luck. I'll see you in the next video.